Hello, and welcome to another episode of the Cash Flow CFO podcast. I'm your host, Andrea Jenson, and today we're going to do something a little bit different from what we normally do. I have some videos out on YouTube, and they have been getting a lot of views. And there's one in particular that I wanted to do a deeper dive into. It's one of our most watched videos. And it's about how to know when you can afford to hire a new team member in your business and how much you can afford to pay them. So what I'm going to do is share with you that video, and I'm going to go a little bit deeper. I'm going to break it down even more. It's a 4-minute clip, and I think there's so much wisdom and gold in there. And I think for our listeners, I'd like to take it one step further and really explain at a deeper level some of the concepts that I'm talking about, because they really, really will help you in your business to understand the team is the biggest, most important thing that you have in your business. And I want you to understand when it is that you can afford to hire more team and grow your org chart. And also, what type of a budget that you have to work with. So let's go ahead and jump in. I'm going to share this video with you, and I think that it's going to be a really good conversation today. All right, let's dive in.
Hi, it's Andrea Jenson with the Cash Flow CFO. And today I'd like to talk to you about knowing when it's okay to hire in your business, and also knowing how much you can afford to spend on that new hire. So we talk to a lot of business owners about this exact question, and we help them to identify where in their business that they're feeling the staff shortage, and to identify, is that a direct expense? Is that a direct labor or an indirect labor? So let me give you a little bit of background.
Okay, I'm going to stop it right there. And we are going to talk about those two concepts. So direct labor is a team member who directly is required to deliver on the sale. Okay, so that's somebody that if you own a law firm, that is one of your attorneys that's working with your clients. If you own a consulting business, that is one of your consultants that's working directly with your client. So you've made the sale, and now these team members are the ones that are delivering on that sale. Okay, so that's direct labor, right? They are servicing the sale directly. Indirect is your administrative positions, or indirect labor could also be when those client-facing team members are doing their administrative work. So when you look at, in the two examples that I gave, one was a law firm and one was a consulting firm. In those two examples of those two types of industries, those team members, for example, cannot work 100% of a 40-hour week servicing clients, right? They need some time to do administrative tasks, check emails, check phone messages, respond to clients, all kinds of things, right? So typically, you're going to want to allocate at least 20% of their time to go towards indirect things in the business. So in this example, you would have one employee that would be 80% direct labor and 20% indirect labor. Okay. So then we look at the other indirect labor positions. So those are going to be your administrative roles. Those are going to be the ones that are so crucial to keeping the wheels on the bus, right? Keeping the business moving forward, keeping everything humming along. Those are going to be your indirect team members. Now, your direct labor and your indirect labor are going to come from two different budget buckets, if you will, in your business. So when we talk about allocating a budget, we talk about, and we'll link to the other training that I have, the other podcast episode that talks more about how to set up these buckets in your business. But essentially, we're looking at every dollar in revenue that the business generates equals 100%. And that 100% you get to allocate proportionately over these four big buckets in your business. So we're looking at cost of goods sold or cost of revenue if you're a service-based business, but for simplicity's sake, we'll call it cost of goods sold, general and administrative, marketing, and profit. Okay. So out of every 100%, right, you are, based on your business model, allocating a percent of that revenue to one of those buckets. All right. So now we understand indirect and direct. Let's continue on with the recording.
Direct labor expense is one of your team members who is directly client facing. They are servicing your clients in the fulfillment of what you are selling to them. So in a service-based business, this is going to be your number one expense. Indirect labor is your administrative team or non-client facing. So think of these team members as they're helping support the internal structure of the business, or they're helping to support your client-facing team members. So once you identify where it is that you have the gaps in your business, then you can look at your budget to determine, do I have enough in my either cost of goods sold, if it's a direct labor position, or and I say cost of goods sold. In a service-based business, it's cost of revenue. But for simplicity's sake, I'm going to use cost of goods sold in this explanation. So if the team member that you need to bring on, where you're finding the gaps in the team, is that you need a administrative position or an indirect labor position, then that is going to come out of your general and administrative budget. So the first thing to do is to look at your budget and determine, do you have enough room to bring on that position? If you do, then the next step is to determine how much of their time. So let's first talk about.
Okay, I'm going to stop it right there, because one of the things that's really crucial for business owners to understand is how much is in the budget for each of those different buckets. So the first thing that we do with our clients, for example, when we're setting up the allocation of the percent to each of these buckets, is we look at what is the true cost to deliver what it is that I'm selling. So if we can go through and identify every single component, whether it's a person, which role, what's their hourly rate, how much time does it take them to do that piece of the delivery, and put a dollar amount to it. Do that for each of the team members that go into the delivery of the service that you're selling. And also look at, are there any softwares that are specific to the sale that you have to have? That's going to help you. Once you lock in your cost of goods bucket, right, you want to make sure that that percent allocation is about 45% of the sales price, right? So if you're selling your service for $100, you want to make sure doesn't cost you more than $45 to deliver that. So take it up to the whatever price point you have, and then do the math to say, okay, this is my ceiling. I can't go over this percent. Now, depending on your business model, you might have a higher cost of goods sold percent, and that is going to fluctuate wildly based on the type of industry that you're in. But in general, that's a good, healthy business model to go off of, is that percentage allocation. So once you lock in your cost of goods, right, and you're within that percent range that we talk about, then the next step is to look at your customer acquisition cost. Once you understand your customer acquisition costs, you can back into how much does it cost you to acquire a new lead. And that's going to help you to set your marketing budget. So essentially, you want to understand that 10% of the sales price of what it is that you're selling is going to be allocated to your marketing budget. Okay. So let's just say you've locked those two buckets. Okay. And then your profit bucket, that's going to be the one where you're putting money aside to pay your income taxes, you're servicing existing debt that the business has, you're reinvesting back into the business, whether that's purchasing assets, investing in training, investing in a new process, a new platform, a new whatever it may be. You want to use the money that's sitting in the profit bucket so that you're not affecting your operating cash flows of the business model for those reinvestment type things. And lastly, in your profit bucket, you are doing owner distributions based on your owner comp package. So what is left, right, after you've identified your cost of goods sold bucket allocation, your marketing bucket allocation, and your profit bucket allocation is your G&A. So your G&A is kind of that catch-all where any other expense that doesn't fall into one of those other three buckets we talked about, your G&A is going to be the one where you have to do that kind of finagling to make sure you're staying within what's left over in your budget. So this is where it becomes really crucial to understand how your business model is set up, because you need to have enough money to cover all the G&A expenses. In the G&A is your indirect labor. So if you have increased your sales, but all of your G&A, which are typically rent, telephone, subscriptions, things like that, if those are staying flat, then you are going to see that there's more room in there. There's money left over. That's where you can invest and bring in some more indirect labor and add to your admin team or, whatever it is that you need there. That's how you're going to know if you can afford to bring on another team member in that section. Okay, let's get back to the video. And there's lots of good stuff left in there.
If they're a client-facing direct labor team member. So you want to create a staff utilization schedule. So what this does, a staff utilization schedule, is it helps you to understand what is my existing workforce, my existing team, and how much utilization am I getting out of them? And do you need, and then you build onto that a billable rate. And so you're able to tell based on what your revenue goals are, do you need to add more team members?
Okay. So this is a really good one here. So a staff utilization schedule is used in a service-based business, and a staff utilization schedule is built out to list all of your team members, whether they're direct or indirect. That part doesn't matter. You want to include everybody in the company on this schedule. And what you're going to do, the purpose of this schedule is to tell you, based on the percent of time that each team member is direct labor allocated, then you're going to multiply that by a bill rate. And that bill rate is what you bill to your clients. And then that's going to tell you per team member, per month or year, whichever you're setting this up to look at it at, how much revenue that role will produce. So that will help you when you do this analysis on all of your team members in the company. You're going to see how much revenue you can generate based on this existing staff. And what that's going to do is give you the tool, right, to say, do I have enough team members at a high enough percentage of billable time, the allocation of utilization, to hit my revenue goals? Yes or no? And then that's going to give you okay, if I want to grow my revenue, I know I need to add more team members, right? So it's giving you this tool that's more than just looking at your P&L, right? Your P&L is what happened in the past. A staff utilization schedule is helping you look forward and plan, right? So it's super, super important. So let's get back to the video and I will explain some more as we go.
So that's how to tell if you need somebody on the direct labor side. That will come out of your COGS budget. And then you can determine what role do they play, what's their billable rate, and that will help you to back into, depending on what your revenue goals are for that period, how much you can afford to spend. So I know I'm giving you a very high level overview of this, but there's a lot of intricacy that, our CFO team, for example, would walk a client through to help pull out this data, to really pull out what their business model is and how it functions, and to identify if you have the right staffing levels based on your revenue goals and based on the utilization of those team members. So if it's an indirect labor position, then that's going to come out of your general and administrative or G&A budget. And if that's the case, then you can just look at, do I have enough in my budget to hire that team member based on what the needs of the company are? So if you want to find out more about that.
All right. So I hope that helps. I think that this is something that business owners find as kind of this, do I have a magic ball to tell me, a crystal ball, right? To tell me if I can afford to hire more team members. But there's actually a much more concrete way to put these schedules together so that you can tell exactly at what revenue levels you'll have the extra room in your budget to be able to afford to bring on, to expand your org chart, to bring new team members in, and support the growth that you're having in the company. So that's hopefully you got some good tips out of this. And there are some other videos on our YouTube page that will explain this a little bit more if you want to go and visit us there. And I hope that if you are looking at adding team members into your business, you will utilize some of these schedules and some of these ways that you can tell whether or not it's the right time and how much you can afford to pay for those new team members. All right. Thanks so much for your time. I hope you got some good stuff, and this will help you to continue to grow your company and grow your team.